Good afternoon, good evening, everyone. This is E from eminywizard.com doing an aftermarket review. Taking a look at FOMC day today. It is the 18th of February 2015. This morning when I woke up, I thought, and I did wake up early, had guests that were leaving and taking off early, so I was at my desk earlier than normal. I was there at 4:30 or so, 5 o'clock, taking a peek. Didn't do anything, of course, but I expected at the time to wake up and find the market higher. I was surprised when it was just chugging along very neutrally, and usually I find that the market will bounce into FOMC. But because of the length of this move that we've had for the last 11 days, it made sense for some traders to take profits off the table. I was looking at the 60-minute chart, thought that was an important chart today, backed up by the 120, still in play, and fairly neutral day that we had expected. During RTH, we were focused on the 5-minute chart. The rain line, we're most interested in the relationship between the blue line and the rain line. Very soft, non-committal type of day. Really got no traction until after the news, and even then it was modest. And again, it's partly theta burn, partly expectations perhaps that some profits need to be taken when we get near a psychological area like 2100. Most important rotation we felt this afternoon had to do with where we opened up with the news, and then the drift back came right back to the scene of the crime and held. We thought that the 89.75, 89.5 area would be very important, and of course 88.75, 88.5, that prior high is still intact. So the range type trade is what we were looking for. Suggested traders don't look for the big home runs, just accumulate and try to make a couple of passes and grab a few points out of the day. Early morning we focused on a 15-minute chart. We thought the relationship between the blue line and the pink line was important. Did a little adjustment and said let's switch it to a 20 and see if that will give us a little bit better idea of trying to hold that 88 area. So we concluded, don't think plunge, just think more neutrally. Despite the fact that we thought we have gone a long way, we thought that we still are above this pink line, and anytime we're above that and the blue line, it's bullish. Anytime we're over and under, it's more neutral. Angels and demons, we set the early angel at 90. That held all day long. Prior day's demon was 97.5. Today's was 97.25. And when we took off in the afternoon from the double, we still could not break that 97.25, 97.5. And our suggestion to our traders was to make sure you're covered into that 97.25 and to assume that that 93.5 days middle would be an important location to try to hold into the closing swing, perhaps for a doji day. We had boxed in today's range. We thought if we broke the 98 zone, then obviously the 99.5, 202 targets were still available. We thought supportive today was this 86 low. Felt that anything above that would be more neutral, and obviously anything from this 96, 97 zone would also be a defensive posture as we range trade. We've come a long way, as this chart shows. White, white, a down day, white, black, doji day, up, 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 up. Count them up, that's 11 days. And in my opinion, that's a long way to run, 128 points without any breather. So despite the fact that we feel we are still in an overbought situation, until we start to rotate backwards and undermine some of these key supports, we're still calling this fairly neutral right now as the market sorts out. Doesn't want to assault higher than 21, or doesn't need a pullback first before attempting that. And these red lines are open gaps below that still are unaccounted for. I told the team to keep an eye on 43.73.5 for the NQ, that if in fact that would hold, that would tell me the market was still going to bounce. As it turned out, that held to the tick, and we got a megaphone pattern where we took out the previous high. So all in all, we try to follow the NASDAQ as a leader, clues for what's going to happen in the overall market. And we point out a few other charts to our team today. We talked crude oil, this 54 double that we have been looking at. We thought this would be a resistance zone. Shows up beautifully with a divergence, probably Class A divergence here, with a higher high on the price, but with a lower high with the stochastic. And obviously a test again of that all-important 49 to 50 area. And this is something I think that in terms of a pattern bears watching. Sometimes you'll set up with a flat top. If they come out the top, then obviously we're going to try to take out 55 and perhaps test that 58 to 57.5 area up here. And sometimes you'll get fooled, and this will just square off and be more of a rectangle. So for now, I'm watching this potential flat top. A reminder, we've got a special going on right now. Anyone who has interest, check out our Reinvent Yourself special. All the details are here, and you'll get a chance to rub elbows with a few top-notch traders who have been in the market for 25 to 35 years, get an education in how the market really moves. And if you have any questions, feel free to contact admin at Marketwizardz.com or admin at eminywizards.com. This is E speaking for eMiniWizard, and I hope you had yourself a great day. We'll catch you on the next one.